Hi, Bitcoin friends. Hope all of you had lots of fun with Halloween and also celebrated 17 years of the Bitcoin white paper. Sadly, this was the first red October in 7 years, with BTC closing the month at a 4% loss. When analysts call Bitcoin's current behavior its silent IPO phase, when bullish signs are in place like big institutional flows and rising infrastructure, but price action is muted for now, showing chart movement mostly sideways. Although November started promising with positive action during the weekend, early this Monday, an exploit to the Balancer protocol is pushing markets down. More details are still to come, and we wish that the markets will show a quick and healthy recovery on the following days. At the time of recording, Bitcoin is hovering around $106,000, while Ethereum is just above $3,600. Most altcoins are correcting somewhere between 12 and 18%. Now let's see what happened last week. Institutional adoption is quietly scaling. The tokenization of real-world assets, RWAs, continues to draw serious attention. Standard Chartered forecasts that the market for tokenized assets could hit $30 trillion by the year 2034, with trade finance and other illiquid asset classes now in focus. Seasonality and positioning matter. As we roll into November, historical data shows the average gain for Bitcoin in this month has been around positive 42%, but the median is only 8.8%, meaning don't lean on the calendar alone. Regulation and stablecoins heat up. Revolut and Citi made their moves on the race for corporate stablecoin adoption, and clearer digital asset regulation continue to create structural undercurrents. Expect these to matter even more in 2026. So what's the market saying? Well, institutional flows plus tokenization infrastructure plus regulatory tailwinds equals setup. But price action suggests a bit of consolidation, digesting gains and waiting for the next trigger. What to watch next week? Will Bitcoin recover above $115,000 and break restraint? Or will we see a reversal towards support around $100,000? Keep one eye on the macro calendar. Easing on tariffs, inflation data, central bank communication, and any large-scale institutional allocation shifts, these often trigger movement in crypto, even if you don't see it in the headlines. Thanks for watching. I'll see you next week for another round of highlights.